In this week's video, I'm going to show you guys how I was able to generate enough income on vacation to pay for the entire vacation trip. Now, most of you guys know that I talk to on a regular basis that I went down to Costa Rica, and this isn't the first time I've been down to Costa Rica. I think it's probably my 8th time. And you know, one of the challenges with trading in Costa Rica is the internet. The internet's not as fast as it is in the United States, but I really did not have too much of an issue this time. They have upgraded their internet a little bit. It was definitely a lot faster than last time, but when I did the speed test, nowhere close to the US standards as far as internet speeds. And I only traded 3 days out of the whole time I was over there on vacation, which wasn't bad. This trip I decided to fly first class, which is the first time ever. And I got to be honest with you, I don't know if I ever want to fly any other way than first class. As soon as you sit down, they want to give you a drink. Your drink starts getting a little empty. They want to fill it, bringing you food. It was definitely a good trip. When I was trading in the mornings, I only traded for a few hours each day, or the 3 days that I traded, and I had a perfect view. I'm sitting there looking out at the ocean, eating breakfast. It was fantastic. Now, I have a lot of video on my GoPro that I was hoping to share in this video, but I think the GoPro may have got a little bit of water in it from one of the surfing trips. I'm having a hard time connecting it to the PC to getting the videos out, so maybe at a later date I'll be able to share some of those videos with you guys. But just take a minute, guys, and I've recorded a separate section on the laptop which had all of my trading results on it. Since NinjaTrader, which is one of the things I dislike about NinjaTrader, if I place a trade on this PC that I'm at right now, it'll show the trade. But if I trade on my laptop, it doesn't show both trades by running one report. So it is important to keep spreadsheets as well. But let's go ahead and take a look at that video and see how I did. And first, we're going to look at the trading scenery that I had while I was trading. Now, here are the trades that was placed while on vacation, and that's one of the great benefits of being a trader. When you're a trader, you can be on vacation, enjoying time with friends, family, and seeing a lot of different places in the world. And as long as you have internet connection, you're still able to generate some income. Now, on my vacation, I did not trade each and every day. And some of you guys may beat me up a little bit on that and say, oh, you should have traded every day. But, the thing is I was on vacation, meaning I was taking time doing things that I personally enjoy. Now, the trades were able to generate $4,212.50. Not bad. And for some of you guys, that may not be enough money for you. For others, this might be a month's salary at your job, or a week, or 2 weeks, whatever it is. But when most people take vacation, they spend a bunch of money. They have travel costs, hotel costs, food, any kind of entertainment while they're on vacation. And they're constantly spending money, where as traders we can be on vacation, take a little bit of time, and trade when we have some free time. So it's definitely very beneficial to learn how to navigate these markets. Now, if we go ahead and we analyze this is something I found that was pretty interesting for me. Now, let me go into the hour of the day. And typically, I trade best between 9 and 10 o'clock. Well, on vacation, I was out surfing in the morning. I was in Costa Rica. I love Costa Rica. And, most of the time I was trading early in the morning. I'd come back after the first session, have some breakfast, sit there, look at a nice view of the beach and the ocean, eating breakfast, and, placing a few trades. Well, a majority of my trades, and this is on the exit time right now, guys, were exited between 11 and 12 o'clock, which is fantastic. If we actually look at the entry time, the best entry time for me was roughly 10 o'clock, which this is after my first surf session of the day, and which very good, right? Bulk of my trades were placed right around 10 o'clock, pretty consistent. I did place a few trades 8 and 9 o'clock in the morning, and this is really interesting. 9 to 10 o'clock, I usually make the bulk of my money during the week, and while I was on vacation, I was actually down during that time period. So that's definitely a little bit interesting. But again, I was on vacation, guys, and that is one of the greatest things about trading. So once you learn how to trade, in this example, my trip to Costa Rica did not cost me $4,000, and I was still able to fly first class. Alright, so let's go ahead and take a look at some analysis. Here we are, we're looking at the Euro USD, and on a weekly chart, we've basically been in this consolidation for quite some time, and we're down here at this lower edge. Now, one of the things that we want to pay attention to is, first, let's see how wide this consolidation is. Consolidation is roughly 1,000 pips, just over 1,000 pips. Now you can see we went from lower edge to upper edge. We didn't quite come down this time. Retested upper edge with a spike above it. Retested again, came down the lower edge. Upper edge, lower edge. Now what I want to see is, I'd like to see the euro come down here and start spiking this lower edge, having some selling tails at the bottom. Now even if we're not exactly down at the lower edge, but we're still in the lower 1/3, it would still meet my risk to reward criteria. And here's what I mean. From the swing low here, and we'll even go to the current price, that's roughly 365 pips. And if we entered there and we're able to go all the way to the upper edge, well, that's roughly 700 pips. That's almost a 2-to-1 reward to risk ratio. Now I'm not looking to enter right here where the market is, especially with the French elections. I'm really hoping that we can get some downward pressure and see if I can get a possible buying opportunity. Now, one thing I am going to caution you at, I'm not giving you guys advice, but if we have a big wide ranging bar through this level and it's starting to look like the Brexit vote, then I'm not going to touch this. Okay, I want to see it starting to firm up. If it's just slamming down, I'm not going to just keep buying this thing. I would definitely want to wait for the momentum to ease up a little bit, and then I'd probably look for a potential selling opportunity as we came back to this level. Now let's look at this on the daily real quick. And the daily chart, here's what I don't like about the daily chart where we are right now. MACD is basically at the 0 line and the lines are flat. So we have no advantage by looking at the MACD indicator. Now if we look at, let me get rid of this real quick. If we basically look at this minor consolidation that we've been in over the last 6 months or so, you can see we're almost kind of in the middle of that range. More so towards the upper end, but we're kind of in the middle of this range, and that's not an area where I want to take trades. I don't feel like we have an advantage in the middle of a range. And if you want to look at it, we have a swing low here and a swing high here. Well, in between this swing high and this swing low, we're right in the middle. All right, right in the middle, we don't really have an advantage. Our risk to reward is not going to be where we need it to be to initiate a trade. Now let's take a look at the USD CAD. Again, we're going to start on a weekly chart. Now if we look from left to right, obviously it's been trending up. Everybody should be able to see that. And we've been just kind of grinding up higher. Now one thing that we really want to look at is we've had a little bit of a consolidation. Let's say roughly right up in this area. If we break through this level here, then we're going to want to start looking for targets up around here. Now this is a little bit different than the euro. The euro, there was nothing lower recently that we can take a look at for potential downside targets. Well, on the USD CAD dollar CAD, we have potential upside targets here. Some of you guys like taking buy stops. For me, it's not my favorite entry. I don't like the risk to reward with it. I would more like to get long at the lower edge of this consolidation, or even here or down here. So there's a couple areas on a weekly chart that could provide good trading opportunities. Now, from the swing high here, and I wouldn't go all the way up to the wick. I'd probably go to the conservative, the body of this candle right here. That's 900 and some odd pips of potential profits. I don't like the way the MACD looks. All right, but let's go take a look on a daily chart. Let's see what it's looking like on the daily. On the daily chart, you can see we're basically coming back up here, and we have some selling action at the top of this candle. We know this because we have a wick. Price came up here and was unable to hold higher prices for the current time. MACD has had divergence on the way down. So those of you that like the counter trend, which I do too, you could be looking for selling opportunities around the swing point here, which is, you know, around current levels, or at the higher level up around here. Now, ideally, we'd like to see the market come all the way back down to the swing low down here, and see at that point if it wants to firm up and maybe look to break out of that weekly range that we're looking at and head up higher towards that weekly target. That's how I'd be looking at the dollar CAD moving forward. Now we're going to take a look at the dollar yen, and for this we're going to use some Fibonacci's. We're going to go from swing low up here to the swing high up here, and you know, we're right around the 50% level right now, and you know, ideally that's not the levels I like to look at. I like the 61.8 and the 78.6 levels. Well, one thing about this 61.8 level, it matches up with the swing point over here. Basically from the 38% level all the way down to the 61.8, we have no market structure to really tell us that the market would want to turn around, right? The market ran up without really creating any kind of swing points. So on the way back down, we're likely to come and test this 61.8. If we can break that level, then I'd be looking somewhere around this 78.6 level, anywhere between the 61 and 78.6 level, to be honest with you. We have a little swing point here, and then again, right around this 78.6. So that's going to be something we want to keep on our radar. And if this dollar yen does continue to slide down, I would kind of expect a little bit of weakness in the futures market as well. You know, the S&P, the Dow, and possibly the NASDAQ as well. If you guys have not yet signed up for the free daily Forex bias, we will be releasing it here in just a few weeks. Go ahead and sign up with a form below this video. Click on the link, sign up so you don't miss it when we do relaunch it. It's going to be better than it was last time, and again, it's going to be free. And please guys, if you guys enjoyed the content of this video, don't forget to like and subscribe. Until next time guys, good luck and good trading.